Thanks everyone for joining us today. We'll give it a few moments for everyone to dial in. Today we have a very special session for you on green shoots. We're collaborating with the AI department at MAS to bring you the first edition of FINAiM. FINAiM's been set up to facilitate and foster greater adoption of AI in financial services. And today we're joined by 4 AI experts, spanning the largest fintech or even techfin in the world, a global bank, a leading homegrown fintech, and of course, MAS. So I hope this will be a great session. We'll do our best to answer your burning questions throughout the session, and we've also asked our speakers to respond to you directly in the Q&A window during the session. So please do engage with that Q&A window on Zoom. All right, we have just over 130 people on the line so far, so I think we can get going. I'd like to start by introducing Dr. Chun, who heads up the AI Development Office for MAS. Dr. Lee has nearly 20 years experience in AI and data analytics. With a PhD in machine learning, Dr. Lee has worked in different financial institutions, developing AI solutions from fraud detection through to customer analysis before he's taken on this role at MAS. So over to you, Dr. Lee, please take us away.
Thank you, Rebecca. Good afternoon, everyone. Welcome to our FINAiM sessions. FINAiM stands for Finance, AI, Marketplace, and is part of MAS AI development strategy. Artificial intelligence and data analytics has been a hot topic in the last few years. Lots of successful AI applications have been seen in different industries. In the financial industry, AI has also been explored to solve different challenges such as credit risk scoring, anti-money laundering, customer analysis, and etc. Due to the nature of financial services, AI is not to replace human, but to work as an assistant to help human make faster and better decisions for financial service use cases. Hence, I rather call it augmented intelligence than artificial intelligence. Next, some countries such as US and China have published their national AI strategy. Our DPM also announced the Singapore National AI Strategy in last November. For the financial sector, our vision is to make Singapore become the global hub of AI in finance and achieve sustainable growth in the financial sector through the responsible AI. Hence, we develop an ecosystem approach to boost the AI adoption for the Singapore financial sector. This includes platform, innovation, network, and capability. Under the platform, our plan is to develop a number of industry-wide AI projects to help FIs address common challenges. Current Veritas project is one example. Under the innovation, we will provide support to encourage financial institutions' AI innovation through MAS AI Ground and FI's innovation labs. Under the network, we aim to organize different events to increase the AI awareness and keep track of the latest AI development and deployment. FINAiM series is one of our channel. The last part is capability. We'll work with different stakeholders to ensure continuous talent pipeline to support the AI development and adoption in the Singapore financial sector. FINAiM Speak series is a knowledge sharing program for financial professionals, AI practitioners, and AI investors. Every session will focus on a theme, which is a particular use case of AI in finance services. Today, we have 3 wonderful speakers from the industry to share, from the financial industry to share about how they use AI to overcome credit lending challenges. FINAiM speaker series work like a bridge to link AI possibility with AI development through 1, find out areas where AI have the biggest chance to succeed and can really make difference in the financial sector. Number 2, how to address real challenges when deploying AI solution in production. Number 3, what is the pro and con of AI solutions? What extra value can AI bring comparing to the traditional approach? FINAiM speaker series is just a start, not our destination. After FINAiM speaker series, we will organize FINAiM roundtables to have a deep discussion about potential AI project collaborations. MAS ADA grant can be used to support financial institutions to adopt AI in their business and operation. We could also initiate new financial industry-wide AI projects to address common industry challenges and harness the benefit brought by AI and data analytics. Our goal is to sustain a vibrant community and work together to move AI from idea or POC to production and mainstream. Today, I'm excited to have Dr. Fang Yanming. Dr. Fang is the head of credit risk model of the digital finance group at Financial. He had more than 10 years of experience in credit risk model and credit risk management across major US banks before he joined Ant Financial. We all know that COVID-19 has changed the whole world. Forbes published an article stating that the value of fraudulent transactions grew 30% in this March. With increasing online activity, fraudulent transactions become a big concern. Have you ever wondered how AI is used to detect and prevent fraud in the credit payment? Dr. Fang is going to review how AI is applied to address this issue in the Ant Credit Pay. Please join me in welcoming Dr. Fang. Thank you.
Hi, everyone. So this is Yanming, and today I'm going to talk about deep learning and credit pay fraud detection. So basically in China, right, because of the rise of AI, big data, and cloud computing, the traditional financial industry is migrating to the tech fin companies. Mobile finance, mobile lending, mobile payments, intelligent customer investment has been dominant in the financial industries in China, in China's market. So today I'm going to talk about how Ant Financial uses AI to change the ways we handle fraud detections. First of all, I'm going to introduce Ant Financial. Ant Financial is a company that provides financial services to consumers and small businesses. We serve about 1 billion consumers and millions business over the Chinese market. For Ant Financial, we have a product called Ant Credit Pay. Ant Credit Pay is one of the most popular credit payment products in China. We have a survey show that 75% of people who is under age of 30 uses Ant Credit Pay. And Credit Pay built a bridge between the merchant and the consumer. So the customers can use Credit Pay to spend first and pay later, while the merchant will receive the payment when the customer makes purchase. So most of famous brands in China accept Credit Pay broadly. So then I'm going to talk about the risk management system behind the Credit Pay system. So basically, the risk management system is formed by data, machine learning, and intelligent risk management activities. The data is from Alibaba and Ant Financial's data, as well as authorized third-party data. And we use machine learning methods like supervised learning, unsupervised, deep learning optimizations to build our know your customer, know your business strategies to build our approve decline decisions, as well as to manage the credit lines of the credit payment product. Then I'm going to focus on the main topic of today's presentation. So basically, among all the payments, credit pay cash out fraud is one of the severe fraud we detected via the online payment. So basically, buyer receive cash from the seller through fake purchases. So we do see a transaction happen between the buyer and seller. However, the transaction is not real, and the sellers will return cash in exchange for a fake transaction online. And the loss rate for the fake transaction will be 20 times than the business as usual. So basically, fraud transactions has three features, right? There's sparse features. It's not happen universally. It's a rare event, and the attack is violent. So once you block one type of attack, another type of attack will happen in the system. So traditional ways, we do build like fraud scores to prevent fraud, but the effectiveness of fraud score is quite low. So that's why we introduce AI in our fraud detection mechanisms. First of all, to use AI, we basically use models, right? We implemented the wide and deep models, which helps us migrate from logistic regressions to deep learning. So in the models, we, instead of use tens of variables, we use 10,000s of variables. With the help of more variables added into the model system, we are able to improve our precision of detect fraud transactions by 8%. So this is an example of our model, right? Then besides the method change, we also implement deep learning methods to our feature engineering process. So first of all, we use like machine learning, like LSTM process to change time series purchase behavior and fund transfers into a time series vectors. Also, we use like graph machine learnings, like the Genie pasta invented by AI, to transfer or embedding the transaction network into a embedded graph vectors or other features. So basically, among the 10,000 of features we used in our model, more than half of those variables was generated using deep learning methods. Last of all, we use graph machine learnings to detect credit pay fraud detections. The reason is a lot of transactions forms a transaction network. Basically, the pattern of a fraud transaction is quite different on the graph compared with normal transactions. So we use graph machine learning to capture more information through interactive nodes. And the model results more accurate among all methods, which help us to prevent most of the fraud transactions. This method is a published paper by Ant's AI team in 2009 in AAAI. So last, I'm going to show a real-time fraud detection system that Ant used to prevent fraud transaction or cash out fraud in Ant credit pay. So the video you see, the short video you see is a real-time cash out fraud detection system. On the left side, it's a list of the merchants that provides cash out fraud opportunities to the consumers. And in the bottom, you can see the location of the transactions, how many transactions happened in the past 12 months, how many transactions has been blocked in the past 12 months, as well as number of merchants and customers has been processed. On the top right, you can see number of transactions being blocked, as well as the amount of transactions being blocked. In the center of the screen, you will see it's a real-time transaction happened between the buyers and sellers. And behind this system, there's lots of AI models or features I just mentioned, and we use real-time models as well as rules to capture fraud behaviors and then make decisions if we want to block the transaction or not. During the setup of this system, we actually encounter a lot of difficulties. First of all, the transaction network is huge, and it is almost impossible to deal with a raw transaction network that results in maybe billions of transactions and millions of nodes. So actually, we adjust the algorithms a little bit so that the algorithms can be put into our real-time system. The second challenge we are facing is that in order to make it a real-time, the models need to be updated very quickly. So that the computing power required to process the model is a lot. Actually, Ant actually implemented the graph calculation as well as graph storage systems behind the real-time anti-fraud transaction system to block all these transactions. I think with the help of AI, we are able to maintain our fraud transaction rate at a very low level, and the fraud transactions help us to balance between customer experience as well as to prevent fraud loss occurred on our universe. So this is pretty much what I'm trying to share today, and I'm happy to discuss details in the following discussions.
Thank you very much, Yanming. That was a really insightful presentation. If the audience have questions, Yanming will be staying with us for the panel as we go through too. I just have one question for you actually before we jump into that panel. One of the key themes for today is talking about how you take an AI project from a proof of concept and a testing phase through to at scale deployment and overcoming some of the challenges around that. Can you talk a bit about what was key for you in getting this fraud system from that testing phase right through to live deployment?
I mean, the key, I think the most important, I think, is the business driven. I think every AI innovations in financial is driven by the business needs. The reason is we have a lot of transactions happen every day through the end credit pay platform, especially on days like Double 11, where there's a promotions. You will see billions, and even trillions of transactions in one day. And trying to not disturb the customer's shopping experience as well as prevent fraud transactions during a busy day is a key business needs. And we find out that traditional methods, traditional statistical method cannot really help a lot on this. So that's why we turn to AI. And it turns out that we developed the system, we run a few tests and it tests well. So we launch it in real time. It turns out it works very fine. So in the past year in the Double 11 event, I think a lot of my colleagues were sitting there looking at the result of the systems and very happily, instead of being very busy dealing with all kinds of numbers and transactions in older days.
Thanks for that, Yanming. And I think we'll pull more on that as we get into the panel part of the discussion too. So as I speak, there should be two more leading AI brains popping up on your screen as we move into the panel discussion. I'll hand over to my co-host, Pat, to take it away.
Okay.
Thanks, Becca, and thanks, Yanming. So the focus for this panel is how AI has transformed the way of assessing credit. And essentially, we're going to focus on proof of concepts to deployment in a COVID-19 world. And so we're super honored to have a great selection of speakers today that are household names in the virtual world. So firstly, I'd like to introduce Shameek, who is the Chief Data Officer and CIO at Standard Chartered Group, and he's a member of the group's leadership team. So welcome, Shameek. Next up, we have Chun, who is the Chief Scientist and co-founder of ADVANCE.AI. He holds a PhD in Mathematics and Natural Sciences. Thanks for joining us, Chun. And lastly, we have Yanming, who you've just heard from deliver an amazing presentation, very detailed and insightful. And as a recap, Yanming is the head of credit risk model of the digital finance group at Financial. And he too holds a PhD in applied mathematics and is an experienced data scientist lead. So thank you again for joining us. The collective cranium of this panel is absolutely mind-blowing. So don't forget to submit your burning questions throughout the session, and you can do that through the Q&A functionality. So let's start zooming on to the credit process, if we may. And I'd like to start with Chun. So Chun, can you tell us more about ADVANCE.AI, what you guys do, and how you feel that AI plays a role in the lending cycle?
Hi, good afternoon, everybody. Let me tell you a bit more about ADVANCE.AI first, right? ADVANCE.AI is a big data and AI company in Asia, helping to solve the digital transformation. It ranges from fraud detection, process automation. Mainly of our clients are in the financial services space, but our clients are also in the retail and e-commerce sector. If I do a quick introduction of our products, right, very quickly, we have AI solutions like eKYC, intelligent process automation, chatbots. The second category of solutions that we provide are risk management solutions, and then we have also digital lending solutions, things like smart engine, smart collection. AI plays a part here in several disciplines of the credit cycle. For example, the computer vision, we are very heavy on computer vision to detect people, but also not only to detect people whether they they match or not match, but also to see whether it's a fraudulent person or not. So that plays a big part in the credit scoring. And if you look at the Southeast Asia, the countries around us, not everybody has a credit history or a bureau score, right? In the banking industry, they call it the thin files. For that segment, we use big data and AI to use alternative data to still assess them. That's in a nutshell what we do.
Thank you, and that's really interesting. You mentioned thin files, because that is certainly a big challenge that we're seeing across large parts of the world. And just to stay with you for another question, Chun, around what new use cases are you seeing at the moment that leverage AI?
Well, two use cases, right? The first one I mentioned is computer vision. I think it's a very mature use case or applicable use case. And then the second one is we use it in our credit scoring as well. So back to what Yanming presented, credit scoring is really, it's not only understanding the credit behavior of this person, but it's also in fraud detection, for example, where we use things like unsupervised learning, anomaly detection to filter out the bad customers first, which is a big part of the fraud and risk management. Thanks,
Chun. Over to you, Shameek. I know that banks typically may not use AI as much in the credit decisioning process as maybe the fintech and the tech company that we just heard from. Can you talk about how you see AI playing a role in lending decisions, particularly from a bank perspective?
Sure. I think it's not just for lending decisions, but across the board, at least for most traditional banks, certainly for us, the main value that AI brings is to expand the safe space within which we can operate. So what I mean by that is it allows us to extend credit or serve customers or customer segments that we might not have otherwise been able to serve. Yes, it can also help us make more money from our existing customers, but that's probably not where most of the value is. From our perspective, the core value from AI is, can we use it to do stuff that we would have otherwise been unable to do because of considerations around risk management. So in many ways, it allows us to manage our risk better as a way of serving our customers more. Now, what does that practically mean? I think on this topic on credit lending itself, there are two use cases that are in production in some countries. One is in the SME credit space and supply chain finance, where actually Chun mentioned the MAS scheme. So partly with support from MAS, we are looking at how do we use machine learning models to discriminate better between different suppliers of our big corporate customers, so that even though they appear to be equally creditworthy, we can actually extend more credit to the ones that will do better. The other, which we haven't piloted yet in Singapore, but in at least one other country, is just to use, again, you mentioned thin file. How do we use a combination of non-traditional data and machine learning algorithms to start extending retail bank credit card and personal lending loans beyond what we would have traditionally been able to do. So these are two areas where we've started. Of course, there's many other use cases in fraud and financial crime. Actually, some of our most advanced use cases are there. But in the credit space, these are the two that we've already got underway.
And can you share a little bit more, Shameek, about the key success factors when you're going through these projects? What is it that your senior management team are looking for, and how can you kind of build these cases internally?
Yeah, I mean, first of all, I mean, we're still going through that journey, but just reflecting on the first few cases, I think the most important thing is trust, because if you look at the MAS's guidelines around the use of AI, for example, the most important thing that you'll find there is companies are accountable for the use of data and AI in these decisions, accountable for the fairness, for the ethics, transparency of it. And so I think the single most factor is, how do we encourage trust inside our organization and with our customers? So how do we convince people that the new way of doing things, as you might see it as an alternate way of doing it, is as reliable, if not more reliable, than existing mechanisms. And so the single biggest factor, I would say, is education. It's demystification of of AI. I would much rather not call it AI if I can explain it in another way, because the more you scare people saying, well, I'm using some advanced technology that nobody can use, if you're a traditional bank, that causes you to become nervous. So I think demystifying it, educating, reaching out and helping people understand how it works is probably the best thing that we can do.
No, that makes complete sense, and I suppose for you, Yanming, that's quite different. Coming from the world of Ant Financial, and in particular, I just wanted to focus on how you see AI can be used for greater inclusion in lending, because you've explained a few things that you guys have been doing, but it'd be great to understand a little bit more.
Good. So basically, what I'm thinking is, as Shameek just mentioned, right? I think the basic principles or the basic rules for lendings has not been changed. We still build scorecard models. We still use PD models to decide who to give loans, who to decline, and we still use like incomes to decide how much limits we are going to give to each customers. However, the way I see AI used in lending is AI is able to, I would rather not call it AI, or I would rather just call it like maybe deep learning or the new technologies. Is able to help us to process more information or process more data quickly and more accurately. So for example, there's lots of transactions happened on the Alibaba C platform, Taobao, right? So for most of the transactions, customers will put memos. And usually in the older days, those memos, because they're text informations, we cannot use that. But however, with the help of natural language processing, we will be able to process those memos, and we can find a lot of good insights, as well as information that will separate risk among customers by normalizing those memos into like vectors or informations that we can be used in our like fraud models, or even in the risk models. So to summarize my opinion, I would think that AI will help, but it cannot replace the traditional methodologies or the traditional framework that's set up for the lending industry. However, AI will make the decision process more accurate and more effectively.
There's a follow-up question for you here, Dr. Fang, from the audience about the data points that you use in this anti-fraud system. Can you share a bit more about what some of those data points are, maybe focusing on some clear examples that you can share?
The data points, the key data points behind the system is the transaction, right? And so usually what we detect is, I'll give a real example. Sometimes customers made a transaction worth more than $10,000, and in less than 1 minute, he received a cash payment from a merchant with a little bit less than $10,000. So usually that type of transaction chain raises a red flag of fraud. So our AI system is able to take those signals and use all kinds of informations like transactions and the memos I just mentioned, as well as like merchant information. For example, typically, like a cell phone is one of the most popular products that's used by merchant to perform cash-out fraud. So combining all those informations, we develop a model behind the fraud detection system to block the transactions that we highly think are the fraud transactions.
There's a question along the same lines there around data points for Chun, and particularly about how those data points vary in making those lending decisions when you're talking about different countries, Singapore versus Indonesia, say. Can you talk a bit more about the data points that are important to you and how that varies across different countries?
Sure. Let me add on both Shameek and Shameek's comments, right? I think it is correct, right, that the whole AI, it doesn't change the format of the concept that we do underwriting for lending, right? And then what Shameek mentioned was, we need to win the trust, the trust of how the data will be utilized. And in different parts of the regions, there's different trust level. Let me give you an anecdote. one of my friends, he told me this story. I'm not sure how accurate this, whether it's real or not, right? So basically, he went on this massive cruise ship, a beautiful cruise ship. He went on board, bought a ticket online. That's all. He went on there, and then there were people from different regions, right? Different from different continents. And then my friend is Asian, right? But then there were also a lot of European Americans on the cruise ship. So once he was on the cruise ship, then everything was fully automated. He went to the bar, the bartender gave him his favorite whiskey. And then he was excited. Oh, that's great, right? When he was serving his steak was medium well done, just the way he likes it. It was great. But then he looks around him and see all his colleagues, of all his other people on the cruise ship, and say, hey, how do they know about my data? What's the problem here? I don't want to be on this cruise ship. So that is really something that I want to highlight what Shameek was saying. It's really about trust, right? How confident are we in giving the data, and how confident are we that a cruise ship are processing the data, and based on that, they basically build a recommendation engine on what's your favorite foods and drinks, right? Coming back to the question from the audience, what kind of data points we use? Especially in countries outside Singapore, there's a lot of so-called unstructured data. I'm sure Yanming is dealing with that day to day, right? Unstructured data is things like telco data, social data, and then we have data like employment data, and everybody has that kind of data without having prior loan history with a bank. So these are the data points that we use for doing two things. One, to figure out somebody's capability that he can pay back the loan, so we won't overdebt them. And secondly, it's with somebody's willingness to pay back the loan. So in his behavioral data or his transaction data or even his social network. I think Yanming also showed that they use some graph machine learning techniques to figure out who's your social network. And based on that, you can make some predictions and forecasts about whether this person is credit worthy or not. So those are some examples of the data.
Thanks for sharing that, Chun. A question, I guess, for a follow-up for you, really. You've just heard Shameek say that the purpose of AI, or the purpose of his role in AI, is to demystify the term. You've heard Yanming describe it as deep learning rather than AI, and yourself, you focus there on the trust angle. Talk us through when you're pitching new clients. Do you use the term AI? How important is it to build that trust? And does the fact that you're using AI play a part in their decision?
So, if you talk to clients, right, and if you go down, see, the first time you engage with clients, right, they heard about you, they heard about AI, they don't understand really what AI is. Some of them think that everything falls under the umbrella of AI, right? For us, it is very important to understand the objectives of this client. What is the current problem they're currently having in the organization? Right, coming back to end, if there's a fraud problem, we try to solve this fraud problem. Can it be done with, with deep learning, AI, or whatever algo we want to invent? That's secondary. So it seems like what Yanming described, it's really business driven. What is the need of the business? What I do want to highlight is what is very important is that you need to have all the stakeholders. You need to have them. You need their buy-in. It's super important, that part. If you don't have all the stakeholders buy-in, it doesn't matter what kind of method you deploy, what kind of process you want to deploy to solve the objective or to reach the objectives. The stakeholders buy-in is very important, especially for us to clients. And the reason for that is the following. Most of our clients and the people who are put on the project, they have their business as usual. So if you are there and you're not there to solve their problems, not solving their daily problems, right? Then it's very tough to close the deal.
So we've got this far, over halfway, and we haven't mentioned the C word yet. So we're going to move on to that, COVID-19, and there's an audience question here where Chen is asking all of the panelists essentially about, clearly there is a number of challenges that financial services is going through, and how does the risk function deal with this sudden change, and can our AI support what's going on at the moment, because there's a lot of talk about traditional data sets maybe not being as relevant as they were. So just to kind of follow up maybe with you, Chun, to start with, you know, what is the impact you're currently seeing now in terms of lending on and the impact of the potential for AI to solve some of these challenges?
Yeah, so on the lending side, right, for the FIs, it's super important to manage the risk, okay? And COVID-19 situation, although it started end of Feb, I do think globally we have been reacting too slow on that. For example, in countries around us in Southeast Asia, we do see a lot of borrowers or a lot of consumers who are actually self-employed. Okay, if you have this kind of data point that somebody is self-employed, and then you understand the impact of COVID-19, that there's a lockdown coming, for example, those people, those customers, they won't be able to go on the street and sell the product. And that relates again back to, you know, what is the capacity to pay, right? If he can't close and go out on the street to sell things, then he won't be able to pay back. There are some things that you can monitor and see, right? But then what I want to focus on this COVID-19 is actually by form of, for example, this webinar, right? I think the adoption of technology has been accelerated. People working from home through webinar, through Zoom, but also for the financial institutes, where previously they might have been onboarding some of the customers partially offline, partially online. It forced them to onboard them fully online. Okay, that's doing the business, right? And then another thing is, for example, where previously they needed their customers to submit documents offline, or or copies of it online. Well, the FIs are thinking more about, how can they, get a document, extract the text, extract the semantics, and put those semantics in a credit scoring model. And I think what I really see from different kind of financial institutes as our customers, and also the fintech and the e-commerce companies, is that they have been moving more digital, even though you expect e-commerce already fully digital. But then the ones that had the infrastructure ready, the impact is still there, but will be less. So I think for a lot of companies that previously were not ready to do business digitally, they realize now it's time to do that. On the credit scoring side, it is the same thing, right? In terms of having a good digital infrastructure ready, or internal infrastructure ready for your loan management and loan underwriting. The ones that had that infrastructure ready, we see some of our clients, for example, is recalibrating the model. Because of technology, the recalibration can be done faster. That's primarily for the ones that were not digital initially. I think Ant Financial, for example, is recalibrating maybe weekly basis already, with or without COVID, right?
Is that true, Yanming? Is that a recalibration occurring on a regular basis to match the current market conditions?
Recalibration, well, true, yes or no, right? There are certain models, right? For example, if it is a long-term model, then obviously we are not going to recalibrate the model because of a small market change. However, there's short-term models, yes. For example, like a fraud model, usually a fraud model can recalibrate within weeks or even less than a week because of condition hit. If we hit the criteria, then yeah, we are going to update the model automatically.
That makes sense, and I'm sure it's quite difficult for larger, say maybe global banks to recalibrate on a regular basis. And I kind of wanted to just maybe focus a bit more, Shameek, on what is the impact of the current climate having on, say, some of your new machine learning based projects. Can you share a little bit more about that? So projects that you're planning further down the line, maybe for 2021 potentially.
Yeah. First of all, just to pick up on the previous discussion, just in terms of kind of the COVID-19 situation, I think it's useful to think about and with specific reference to the lending pieces. I think it's useful to think about, at least for us, 3 different pieces. There's the role that AI or some types of at least data extraction from unstructured documents, etc., that AI can play in the initial phase of gathering all the information needed for a credit application. That absolutely gets a boost with COVID-19 or with any situation that requires remote working, right? So the moment you can't have as much paper, face-to-face, all of that traditional stuff, clearly going much more digital is important, and AI can certainly play a role there. At the other extreme, we are seeing, not necessarily just in our bank, but elsewhere as well, I think there's a role for more analytics to review and stress test our lending models. We shouldn't forget that part, the back end part of our, what happens to our lending portfolio as a result of the stresses you see. There's a lot of opportunity there to use, whether it's a formal stress test or not, but to use new kinds of data, new kinds of analytics to try and do that stress testing better. The bit in between, I'm not that sure that I'm suddenly going to expand the use of AI for lending decisions because of COVID-19, mainly because of what's already been mentioned, that as there is any kind of machine learning is dependent on a rich volume of data that's coming in to train the model. When that data suddenly sees an extreme discontinuity, obviously there is some impact of that on the core model. So that's just looking at how we look at these 3 components. Now, to your question, I think it's not an AI specific question. Generally, there is a tremendous speeding up of digital adoption in banks, in traditional banks for sure. I'm sure more technology focused companies are anyway adopting it. But most banks are kind of moving at a significant pace across the board. So the main effect of the crisis has been to speed up adoption of digital technology across the board. And yes, within that, we have seen speeding up of approval for previously tested projects, which now we are comfortable saying, yeah, we can go live, partly because of necessity, because earlier we might have had the comfort of saying there's a human being sitting in the way. Now we don't, and therefore that has helped us move things faster. So overall, I think the effect of the crisis is absolutely to speed up adoption of AI by some years. However, in the immediate context, I'm not sure that of the full effect of the discontinuity in data that this has caused.
It's good to hear that positive outlook in the longer term. Chun, before this call, we talked about how AI is difficult to use at this time because of the number of outliers that there are out there now, that it can't have the same pattern recognition that would otherwise happen. Are we talking about getting back to a post-COVID world before AI can start to have that acceleration period, as Shameek's saying, or do you see that there are use cases for it now? And how can we adapt to the COVID situation when we're using AI?
So I think Shameek summarized it pretty well, right? The COVID situation is very unique. A crisis like this, it won't. It's basically happening overnight, although it started in February, right? That's one. And then the second thing is what we hear a lot of from our clients is, what happens after the COVID-19 crisis, right? Because the COVID-19 crisis is a mortality issue. That's on one side, but then it has to also be accelerating the recession that we went into globally. And then another point that Shameek mentioned was, all the environmental conditions need to be stable for for a prediction model to work, right? So it really depends on the objective after the COVID situation. What do you want to do with your business? Do you want to pick up your business and start lending to new customers? Or are you more comfortable with the data that you gathered from your existing customers? So I think it's a very hard question. And my answer is, it depends.
Okay. Does anyone, Shameek or Yanming, do you want to pick up on that depends answer? Do you feel strongly either way?
So I mean, I totally agree with Chun and Shameek, because for me, I think COVID-19 doesn't really change the way we treat AI or the way we plan for AI development and financial, especially in my department. So I think the basic principle for credit risk model doesn't change, regardless it is a COVID-19 event or it is something that, if 08, 09, the financial crisis happened again. The principle doesn't change. However, the way you can use more advanced technologies like AI to process data to get more information, I think it will always help to improve the accuracies and to better predict the likelihood of a default. So I would think, for me, I would think, and I don't think COVID-19 actually changed anything in my end. However, I do agree with Chun's point. It really depends on what area you are going to use the technology. So that's my point.
Okay, would you like to add to that, Shameek, or there's a few audience questions stacking up now, so I'm happy to move to an audience question.
Sure. I just like to clarify. I think my point was not necessarily, I think none of our points was necessarily that COVID-19 is slowing it down. What we're saying is, if you think purely narrowly in the context of, does AI allow us to predict default better in the COVID-19 situation, then I think the answer is not necessarily given the data situation. But that's not the only use of AI, as we just talked about. Everything from in the credit process, there's various stages in the credit process where AI can be used, from extracting information from new sources to doing stress testing on your existing models to see how well they're standing up. And I think as you look across the board, I would say, if anything, it is positive. It's just the very specific point of saying, are the models trained on past data relevant now? Well, in many cases, they're not. That's just stating the obvious.
Okay,
Yep.
that makes sense. And one of the questions we have here is around could you maybe, Chun, share a bit more about how AI can help manage non-performing loans asset management? And that's becoming quite a big issue. And I know you've mentioned a little bit earlier on about this, but it'd be good to be a bit more specific around this.
Credit and asset management, right? So if you look at on a credit side, right? How we have been helping our clients with that is we look at the whole process first. What kind of data points they capture? What kind of data points go into their current scorecards, either expert scorecards or they have some some algo already, right? There are two, I think, two important things in building a scorecard like this. One is to understand how well the current scorecard performs and whether we can optimize it by using better algos. But that's a technicality, right? The second one that's more important is actually to understand what kind of features, so-called features, what parameters are fed into the scorecards. And as mentioned by my panel members right here, the method of underwriting hasn't been changed, right? What AI will give us, right, or what technology, what machine learning will give us is actually we are more accurate in our prediction. That's one, and then we might also be faster in underwriting. Right. So how they manage it, it's gonna depend, right? Because every model will give you a probability of default, and that one is of course correlated to the approval rate, right? Where's your cutoff, right? So if you are talking about, okay, how can we manage our portfolio better? Again, coming back, what is your objective? Is your objective to have a big loan book? Oh, I can put you approval rate on 100%, right? If your objective to have no debt, I can put your approval rate on 0%, right? So again, you need to go back and see, if you want to manage your portfolio better, what is really your objective of deploying a technology like AI? In terms of how far it can go, right? I think the holy grail of using technology in the lending space is really to have risk-based pricing, right? A person like like Yanming, he's much richer than me, but if he has the same credit card, how come he pays the same interest rate as me, right? So I think as a short answer, again, it depends on what your objectives are.
I'd like to push you a little bit further on that, Chun. So I know it's about objectives, but you know, if you had to pick out specific strands of AI or scorecards that would really make a difference here, you know, what would make a difference to say the financial services sector?
So I think the easiest way to measure, right, whether your scorecard or your AI is working is the following. You keep the approval rate constant. Are you able to, with a constant approval rate as before implementation, to have a lower MPL or default rate?
Okay, and then Yanming, how does that compare to your experience in China around managing non-performing loan asset management?
Well, I agree with Chun. So basically, I think with the help of AI, the most obvious change I can see when I came back from United States is that I'm able to use tree-based models to process those non-linear variables. And with that, that helps us to improve our models by maybe or maybe 15% better, make our model 10-15% better in terms of accuracy. So I mean, it is a very common machine learning process, and I would not even call it AI, right? So it has been used for more than 10 years already. However, with just that small change, we were able to perform better. So obviously, machine learning or deep learning or maybe AI can help with the credit decision process. However, it will not change the principle of how we do the business.
I'm going to shift gears a bit and I'll go on to Shameek. Do you want to add something there?
No, I was just going to say, maybe you were going to do that. I was just looking, there's quite a few questions in the Q&A about privacy, there was another one earlier about Apple and bias, and how do you handle that? And I think there's also a point about how do you move from POC to production. So I was wondering, Rebecca, if I should perhaps share a bit about how we're looking at this, because that's as a traditional bank, that's a very big focus area for us, particularly given
Please, privacy and POC, exactly where I was going to go with you. So take it away.
Yeah. So I think it's I'm responding to two related points. One on privacy. It's actually relatively simple because we don't even start. I think when you think about privacy and ethical aspects, there's two different things to consider. First is the appropriateness of using a certain piece of data in any algorithm, whether it's for credit or anything else. And there's a whole set of considerations that at least we would have. It differs by country. A particular type of data is allowed to be used in Hong Kong or Singapore, is not allowed in Indonesia, or vice versa, right? So in our case, we have every country's compliance team actually looks through the fields that we are sourcing if we are using third-party data, and they actually review which ones are allowed in the context of credit lending or a particular use case in that country. In fact, many of our data providers as well are actually already coming up the curve on that, where they wouldn't even offer a particular type of data in a particular country for a use case if that wasn't appropriate. So to that extent, I think traditional privacy works. I think the point then is moving from privacy to saying, is the use of that data exposing our clients to unfair bias or ethical issues, etc. There was a question on that, and we've kind of taken this and said, let's just break this problem down. The first thing we'd want to do is to have reasonably good explainability of the underlying features. So which features are driving the maximum impact on the outcome of the credit decisioning, and just look at them in Singapore MAS requirements. There's a difference between explainability and justifiability. So we would look at it and say, okay, looks like whether somebody has switched their mobile network or not seems to be a good predictor. But just because the machine says so, we wouldn't accept it, because we would need to be able to justify why. In Singapore, you actually have to justify why we chose mobile network switching as an important feature. And if you can't justify that in business logic, then in Singapore, you can't use that feature as an example, right? So I think the explainability aspect is very key. Which features are driving the outcomes? Once we do that, it's relatively easy to catch the Apple kind of situation where you say, well, which are the variables that we want to, which are the protected variables that we worry about? Let's say it's gender, race, marital status. So first thing to check is, are we using any of those features in our model, right? If the answer is no, the next thing is to say, okay, maybe we're not directly using it. Can we overlay the results of our model with the gender, even though we didn't use it? And then does it suggest that more women are getting rejected in our credit card application than men? And if so, is that because of a genuine reason? So I don't have the inside story on the Apple Goldman Sachs issue, but at least one person who's reasonably well informed suggested that actually in the US you can you cannot actually collect gender. So the most likely reason for women to appear to have been discriminated against was because perhaps they used wealth or income as a deciding factor for deciding the credit limits. And if you do that, then obviously that will lead to that outcome. So I would say, continuing with that point of trust and demystification, what we've seen as the most important thing moving from POC to production is how do you take apart that AI model and make it as easy to understand, at least internally, as possible? Because then all these questions about, are we doing something inappropriate? Is that icky? Does that expose us to bias, reputational risk, etc.? It all starts with having good explainability. If you don't have that, everything else falls apart.
Thanks for that, Shameek. I think that's a really helpful example there. And then moving on to the second part, which I know you were going to come to, is around scaling POC. So this is more broadly about the adoption of AI in financial services. And we talked earlier to Yanming about how you get from that testing phase through to live deployment. And I know you're quite vocal about the challenges that there can be in getting something from POC through to scale. Can you talk a bit more about your experience in that from a bank perspective?
Yeah, sure. So basically, I think bring something from POC to production, you need to have a thorough test, including like you need to have a function test, you need to have a RAG test, and you need to have all the scenario tests, including stress test, to make sure that the model works as designed. I mean, I specifically focus on as designed, because when we implement a model, we need to go through like design discussion as well as implementation discussions. We need to make sure that all the functions, all the results that we planned at first has been reached. Until the model passed that test, we are going to push that model into production. And also the test involves like a real-time test. We will have a system that will perform as business as usual, and the models need to run in the system for an extensive of time to make sure that the outcome of the model is the way we want before we can put that into production. So it's the same as we implement a logistic regression model in the older days. I mean, you need to go through all the tests, you need to explain all the variables, you need to make sure that everyone gets the right score before you can push the POC into production.
Thanks, Yanming. And I think Shameek should hopefully just be dialing in. It looks like he's had a connection issue there. But Chun, from a fintech perspective, how do you get over that POC part with a bank or with a client that you're working with? How do you scale up from there? What are the challenges you face?
So I think I touched base a bit about that already. It's mainly about getting buy-in of all the stakeholders. Right, a bank is not coming to you, or we are not going to them and start a POC if we are not solving a problem with them. Right, and like I said, right, it's not about the technology or whatever we bring them, right? It's helping them to solve problems, having buy-in of all the stakeholders, because all the stakeholders having the business as usual as well, right? And see whether the goal that we want to achieve is met. The good thing about the AI projects or data-driven projects is it's very measurable, right? It's very measurable whether something improved or not. For example, it's very measurable whether you can there are more fraudsters going through your platform or not. So that's a good part about it. There are some challenges in longer-term projects, meaning we need more time to collect the data, the data or labels or the results, right? So, for example, if you use a model to build a credit score, let's say a credit score model for, let's say, a mortgage, right? And you implement it, well, 30 years is pretty long time, even for a bank, right? Not only for fintech. So yeah, it's some of the projects are can go from POC directly to production. Some of them, there will be some more thoughts from the management, from the key decision makers before they want to implement it. But once it goes through POC, whether it go live or not, two main things: buy-in of the people, of the stakeholders. Secondly, your data, your assumptions, your goal needs to be met.
Shameek, do you want to add to that from a bank perspective? Oh, we can't hear you.
You would if I managed to get my speaker down. Sorry for that. Sorry. I was just saying, I just recap two of the very key themes. I think buy-in and business case. So you really, I don't want to productionize a POC just because it's AI. I want to productionize a POC because it actually delivers some business value. So that's very important. I think buy-in, I've already talked about the importance of building trust, and trust not just with the person sponsoring the project, but with all the other army of people whose task is to keep the bank safe. How do you convince all of them that it's safe? Beyond that, I think the two that I would highlight from our context, and it may not apply to you, Yanming, because you are kind of a tech company built bottom up, whereas we are more a traditional company building and this stuff. One is data. I mean, we don't have an Alibaba, so I know not having enough data means that it quickly becomes meaningless to have an AI model if you can't get sufficient amount of data. This is why being one of the leading, if not the leading trade finance player in our part of the world, that's why trade finance is one of the first areas where we looked at, because we have a lot of data in that space. So the lack of good, reliable data is obviously an important factor. The other is technology, but not in a straightforward way. I think the technology for building and kind of productionizing an AI model is one thing, but embedding that in a traditional bank into the specific system that is used for decision making at the interface with the customer in a way that immediately the cash system is releasing the funding, etc. At least for traditional banks, there's a lot of systems involved. The AI decision making is the easy part. Fulfillment often is much more difficult, and that can often also be the barrier. Just before I move on, one thing, by the way, for it might be 30 years is a long time for other banks, Chun. We're 150 years here for good. We've seen many 30 years along the way. Anyway, nice. Sorry, Rebecca. I hope we answered.
Yeah, definitely. I think this session
type models, right?
Yes, indeed.
Yanming is almost crying. No? He's iterating 5 models per day.
Yeah.
Go on, Yanming. Do you have anything to say, or you're just laughing away?
No, I mean, I've been working with traditional banks, so I know I have the same feelings as Shameek feels. So I totally agree with him.
Right, we're coming to the end of the session. I think there's some really key messages here around getting the right buy-in, around trust, around fairness and measurability. I'm going to ask each of you just a quick fire round on any final words that you'd like to share as advice around the adoption of AI in financial services. That's clearly what this series is, with our first session hoping to kick off. Shameek, I'll start with you. Quick fire on some advice for our audience.
Don't aim to use AI for financial services. Aim to use whatever is necessary technology-wise, data, AI, other kinds of technology. If you start with saying, I want to use AI, you're asking the wrong question.
Got it, Yanming?
So I think AI is just a tool. You have a lot of tools. The only thing is trying to solve the problems you're facing and make business better.
Solving problems first. Chun?
Don't be afraid of AI. Don't be afraid of data privacy. I believe that the data should be owned by the consumer itself. So as long as you feel you have control by giving away data for whatever purpose, I think things will be fine.
Great. Thank you so much for all our panelists for joining us today, and to our audience. There's still a couple of audience questions unanswered, so we will follow up with our speakers after this session and come back to you over email or over message to make sure that you have those questions. But thanks so much for joining us for our panel. Thanks for joining us for our first edition of FINAiM, brought to you with Green Shoots. And you should now see on your screen a QR code, which means you can follow both the FINAiM series, so you can see which sessions are upcoming, and also join our follow-up Green Shoot session. Tell us what topics you want to hear. Thanks again for joining us, and thanks to our panel.